Hi traders, and welcome to the Technical Analysis Market Watch on Friday the 27th of February. So I've seen some really good market moves this week on a lot of the currencies and the key indices that we check out every week. So let's jump into the charts and see if we can identify any trades for today or early into next week. Alright, so we'll start out here with the Aussie USD. And we can see that we've got a pretty good move. Basically, this week has been fairly strong. We saw a little bit of weakness early in the week, but after that, we started to push up pretty heavily. And today was a big indecision day, or the last session was a pretty big indecision session, because you can see that we've effectively got an open and close at the same spot, but the range of the trades in between 70, 68-ish to all the way up to 71.37 was quite extensive. So really, there's a lot of indecision in this area, and we're not really surprised by that, because I guess we've already seen resistance at this point here around that sort of 71.30-ish area. So no real surprise to see that that was a resistance point for it. But it did push all the way down to the lows of around 70.60. So look, it's a decent move down. There's no question about that. And there is a lot of congestion around this here. We can see that we've got effectively the last 3 weeks have been very, very heavy price action where, almost every day has interacted with this level. So no real surprises, but I think that we're starting to see a little bit of pain at this point. It's really struggling to get past it, actually. It's attempted to go off the 20 moving average, failed again. If we don't see a daily close above that 71.50 soon, and it does roll over, I think I'd be starting to look for shorting opportunities down to the 20 moving average, and of course a break of that, and then we're going to start, looking probably in the high 60s again. So first things first, we have to give it the benefit of the doubt. If it does get past the 71.50 with a daily close, then we'll look at taking it up higher to, you've got to go out a long way before you can actually see any form of resistance for it. And even this area here you can see is very heavy resistance. When you zoom right out, this is why we're having so many problems here, because we've seen this in the past, right through this area here. It's an extraordinarily strong zone, but if that gets broken, the next real level for it is around that sort of 72.80 to 73. So some pretty good trading after that, but we have got very heavy resistance at this point, and until it actually does get broken, I would rather just watch and see, and then get involved when we get a close above 71.50. Look for opportunities on the way up from there. All right, over to the dollar index, and this has been another one that's kind of ground out this week, really, down to the 20 moving average in today's session, and then pushed up. But you can see here, this price point at around that 98 has effectively seen price action. Probably 5 of the last 6 candles have actually interacted with this zone, and 3 of them have sold off. So it's a difficult level to break through. And it's a roll reversal zone again. The roll reversal zones are extraordinarily important at the moment, given that the markets are going sideways with a little bit of indecision. And you can see here we've got very heavy support and a lot of price action in this zone here. A reversal from that point there, very heavy support at this level. So look, when we do get past, if we do get past that, is 98, probably 15 to 20. I would be looking at that as the opportunity. Once we see a break above there, then we're looking at 98, 60 to 70 as the target, which of course is going to weaken the euro. We'll have a quick look at that in a second. But look, I think that right now it's a holding at the 20 moving average, which is what we wanted to do. It's very important that it does actually maintain this level above the 20. And if we see a break above there, then we're going to get the big higher low sequence, and then we're going to look for moves up to that 98.60. That's the opportunity there. A break of the 20 moving average, and then I think we're starting to look at that 97 as the new target. Of course, the euro is the opposite of that, and you can see that we've seen quite a bit of congestion in this zone between the 20 and the 50 moving average. I would think, though, that given that we're also at a roll reversal zone here, I mean, there's no question about that, it's a support zone that is holding up very, very strongly. You can see these levels here have been a very, very strong point of interest for price, and we've got a 50 moving average basically underneath price, and then we've got the 20 moving average holding it down. So I think a break above that, now, of course, the dollar index would have to weaken for this to happen, then we're looking at probably longs up to the 119. But the likely scenario, especially if the dollar index breaks down and starts pushing down, if it starts pushing up, this is going to push down, and that's going to see us back down here, more than likely at around that sort of 116.80 to 117. if the dollar index goes to that 98.60 to 98.70 that we looked at earlier. So certainly one to keep an eye on, but I think we've got to be very, very mindful that we're congested in between these two moving averages, and a break either side, despite what the analysis on the dollar index is doing, is probably the way you would trade it. You'd be looking for the lower high, lower lows for the short, or the higher high, higher lows for the long, and taking that opportunity to move to the next target. And both of them are a reasonable get. There's a fair distance in between both to get some good trading in that area. All right, over to the S&P 500. Look, nothing sort of session in the sense that it didn't actually make any ground, but it certainly did have a range that was a lot worse than it looked on the close. So 68.60 is the low of the day, but it has managed to basically bring itself up almost 1%. It was looking pretty dire there for a little while. Still down, no question, but this is a very important zone for it at 60, basically 6,900 flat. You can see all of the price interaction points, resistance right through there, support right through there, all the way through here, and resistance at these 2 points here. So to say that this level is very, very important would be a bit of an understatement, obviously, but we've got a 20 and 50 moving average dying to cross over. Look, price is doing its darndest to keep it apart, and you can see that even with this bit of a rally that we've seen over the last few days prior to the last session, the moving average actually was going from down to crossing to up, and actually running parallel again. Look, it's one of those things where we really need to monitor price action to see where it goes. It's very difficult to actually predict where it's actually going to definitively until it actually has a break on either side. So I would be quite happy to, if we do get a bit of traction, we start to see a series of higher highs and higher lows on a smaller time frame. In the session itself, I'd be looking at the previous high as a target, so 69 sort of 70-ish area. And then, of course, a break of that, we'll see a break to a new high, more than likely. So but in the first instance, I'd be trading it up to these previous highs. I wouldn't be looking for a groundbreaking trade there, just more of the same high, low sequences and scalping up to the previous resistance. But if we do get the next session and we're closing all of a sudden down below the moving averages, which I think is a really important concept here, and just as importantly below that 68.60 area, then I think we're starting to look a little bit more dire, and probably 67.50 would be the target that I'd be aiming for in that instance. I'd be starting to look a little bit more past these levels here, and thinking that we might get that 67.50, which we also know is a very strong level. A lot of indecision on the S&P 500 and all of the US indices for that matter at the moment. I think the market is at a stalemate. We've obviously got earnings coming out and playing havoc a little bit with the market, but not really pushing it around. I think we're just not probably getting the information that the markets would like, but that's all right. We trade what we see, and there are opportunities in between those two zones that you can get scalping opportunities in. And I think that's really important to highlight that when we do have opportunities on the way up, and and you've obviously got a target on the way down as well, 67.50. If you play inside that zone with smaller time frame, lower high and lower lows, and higher high and higher lows, it's going to give you a good opportunity to get good scalping opportunities in, and probably just as importantly, aim for really, really good targets, because I think that's really important when you are scalping, to have very solid targets to aim for. All right, and let's move on. Finally, we'll have a look at gold. I think gold has been, one of those ones that's basically pushing up higher and higher every time we talk about it, but it is starting to get a few more little pullbacks that we might be able to take advantage of. So we can see right through here that it kicked off the 20 moving average again, and obviously made a new higher high, which is great. High, low sequences we love. We love lightning bolts that basically go through and continue in the direction of the major trend. And this has been no exception. We can see we've done that. What we're looking for here, though, of course, is a break now above. If you're not already involved, what we're looking for is a break above the 52 probably 30 area to break this zone here. Then we're going to look for the 5420 as the next target for the upside. If you look for on the smaller time frames, obviously you're going to see quite a bit of congestion in today's session, but prior to that, you can see that we've got a lot of higher lows happening. These are things that we're talking about each and every day, and that's what really makes the market really function, because that's what you're looking for. You're looking for those opportunities. Even on the 1 hour, you can zoom it right out. You can see that we've had opportunities all the way up And that's what we're really looking for. Once we get a break of that zone, and this is why it's important that we do break this zone, then we start to get the sequence of momentum. And once the momentum is in our favor on the bigger time frame, and we go to the smaller time frames and look for the pullbacks of the 20 moving average, the targets all of a sudden become very viable targets because momentum on the bigger time frame is on your side. And that's really, really important in anything that you're trading, let alone a momentum trade like gold. That momentum, the bigger momentum prevailing time frames are on your side, moving in that direction. And then of course we're looking for a target around the high here. I wouldn't be going to the extreme target. Right now I'd be looking for scalping opportunities and looking to target the previous close. Like we've got 3 closes there, or 3 price open or closes at that 54, sort of just above 54 level. So that's the area I'd be aiming for. I wouldn't be looking at shorting opportunities on gold right now. The trend is just too strong. So I hope you've had a great week's trading. Really, really good opportunities, I think, and some really, really good setups on a lot of the key resistance and support zones. Hopefully you're able to take advantage of some of those. If not, next week should hopefully be very similar to this week, where they are bouncing in between the zones. So have a fantastic weekend. I look forward to seeing you all next week.